to your second business challenge session. This is your opportunity to ask folks that are experts in their field that can answer questions that you may have about your business or your insurance or legal issues, CPA issues. We're thrilled to always have Mike Spiegler with Spiegler Blevins, John Martin with Penn Stewart, and Mickey has been our new addition now since COVID, and we're glad to have him with Slimp, Brandt, and Sanders, which used to be the Insurance Center of Abingdon, Mickey Tyler. So make sure that you don't leave the night with unanswered questions. These guys are here, they're spending their time to help you, and no question is silly. So without further ado, my friends, Mickey, Mike, and John.
Huey, Louie, and Dewey.
Kathy, sometimes in the past, we've had the contestants go down and introduce themselves and talk a little bit about their business. Is that something that you guys are interested in?
Let's do that.
I think that'd be helpful.
Yes, let's do that, and let's start over here on the far right in the center.
Hi, my name is Ian New. I am with Alley Cat Cafe. We are a social event space that also doubles as a foster home for adopted cats.
Hi, I'm Angelina. I am partnering with my mother, Danielle Charette. We're doing Platter and Pour. We are a wine and charcuterie bar, so we're open to Abingdon Commons, and we work with a lot of local people as well as imported stuff to really just bring Abingdon and for us a new restaurant and fine dining experience.
Hi, I'm Cassidy Case. I'm a holistic health practitioner and I'm holistically healthy. I see clients right now, but I would like to expand and really focus on like functional diagnostics and do all this stuff like that, blood works, consults, and integrate general medicine and like getting people involved with their health.
I'm Janet Meadows, and I'm with Mendota Expeditions. Excuse me. I operate a river tubing business out in Mendota. It's just a seasonal business, and I'm just trying to get it to grow and spend my season and try to get more income than paying for all my insurance.
Hello, my name is Scott Rowe. We're getting ready to open a Touch of Grace. It's going to be an inspirational religious shop like that. You can come in and just get like inspirational items, like get you through the day, like you got this and stuff like that.
I'm Cassie Rowe. I own a couple businesses, but I'm here today representing Shaked. We do couture milkshakes, baked goods. I was a little offended by the cookies that are in the break room, but I'll get over it. When we were coming in, I was like, oh, I should have brought cookies. Sorry, I'll bring them next time.
There's no better way to market to
I'm telling you, I mean, you gotta eat it. But, so anyway, so we do, like I said, the milkshakes and the ice cream and the desserts, but we also do like birthday parties and, you know, if somebody wants to host like a baby shower or something like that, like we rent our space out if they have a need. We're working on expanding our offerings, and we've just been open since May, so we're still learning, but we're getting there.
Hi, I'm Callie Jones. I own the Glass Peacock. I've only owned it for about 6 months now. We teach classes on how to do stained glass. We do repairs. We do commission pieces. We even do studio space for anyone that already is doing stained glass and just needs a place to work, where we provide all the equipment. And I sell all the materials for people to work on the hobby. It's a lot of fun.
And she's good. Just go in and look at her stuff.
She's in my building.
Just saying. I mean, I'm attached and, you know, she's my landlord, but she does good things.
So let me stop and let's go right here so that we.
Sure. My name is Amy Lunsford, and this is Jordan Andrew. He actually will be working for us, and we are looking to open a gallery. It's called GF Canoe. And Gary Canoe, who is no longer with us, was a great artist that no one knows about, and that happens a lot with artists. who I'm getting married to, I looked at his art one day, and he has over 5,000 pieces of art. And I have never looked at art that way before. It was the most beautiful, and to be so diverse. He drew all kinds of scenery, and a lot of that scenery was here. Some of it was in the Tennessee kind of flat area. He drew a lot of old buildings, industrial. He drew lots of modern art as well. The sad thing, and the reason I think it's important for you to know this, because whether we get this grant or not, I think it's good that we would love to have people stop in and view his art, is Mr. Paduch was married, and Derek Paduch, who is the gentleman that I'm going to marry, when his mother, when he was 12 years old, his mother committed suicide. And he lost his mother at a very young, tender age. He had a sister as well, she was 13. And this art became a way of him to express himself. And he did that in such a wonderful way that we are still categorizing all this art. And you can imagine he passed in 2020. He wrote 7 books. He went to school at ETSU. He taught at the Hills High School. And so what I would like to do with this gallery is, we're not looking to make money. We're looking to embrace this art and to allow people to learn to study from it, and also to be able to have colleges and universities to bring students in, and even offer an ability for an artist to paint like on the weekend, to come in and do that. So we hope this to be an educational project, and a healing one as well. So.
Thank you. Now we'll go back to.
Hi, I'm Becky Ramsey, and I'm the owner of Windhill Gardens right here in Abingdon. It's an aquaponics farm, and we are looking to diversify this year and start an agricultural preschool.
I'm Megan Borgline. I'm an owner of the Bookseller. We are a used bookstore. We just opened up at the end of May.
I'm Jeremy Blackwell, and I'm just opening Epic Training Center. So, new gym here in town that is focused around functional fitness. So these are class-led trainings, classes. I do a lot of programming, nutritional guidance. So, kind of a holistic approach to the gym. So, to give us a competitive advantage against your key fob gyms that are typical in towns.
I'm Jennifer Lowe. I'm an audiologist, and I actually was in this contest last year, and I loved it so much I came back for another year. But so we're coming in as an existing business. I own my own audiology practice where we mostly focus on hearing healthcare that's affordable and trying to educate the public on making smarter decisions about hearing healthcare in general and not overpaying for hearing aids and just hearing conservation. But this year we really want to add, my specialty is really dizziness and vestibular care, and there's only one other place in the area that does that. So the equipment to do that's around $80,000. So we're looking for any and all help we can get to help fund that endeavors, and so that we can, be able to, so people don't have to travel to universities. Like mostly right now I'm referring out to Wake Forest or UVA for that type of testing, and so we really want to bring business and balance to our clinic.
I'm Kitsy Manuel, and I own Love and Light Specialty Boutique. We opened in 2020, brick and mortar. We were online for a little bit before that. This year we're trying to expand and pivot a little bit. so we're excited to participate again. This is my 3rd or 4th year, I don't know. I just enjoy it so much, like Jennifer said, we keep coming back for more.
I'm John Wood, and I'm going to table a retail space that called Emporium at Abingdon, not to be confused with the old Abingdon Emporium. We're looking to bring in local artisans and makers and vendors to one location to cover our tourist crowd that comes in and our locals to bring in and show what Abingdon has to offer in the way of offering Abingdon gear, souvenirs, and products to help promote our small town.
My name is Justin Lewis. I'm actually with People Incorporated, and I'm here as an observer today.
You will see Justin on, are you doing Where's the Money?
I'm doing it in collaboration with one of our lenders.
Okay.
But yeah, panel in February with this challenge.
Okay. Okay, so with all the introductions made, I always like to start the first question because I think it's very important. We've had folks that get a little confused about this, but John and Mike, will you describe the difference in a sole proprietorship, a LLC, a C Corp, and an S Corp, because people get confused about S Corps.
Liability? Sure. Yeah, I'll start first with the legal aspect, and because I think with all of those, whenever I have anyone who wants to talk about it, organizing a company or starting a business, what I always tell them is, have you spoken to your accountant yet? Because it's going to matter both in terms of how you operate initially and then in how you intend to grow as you go down the line. So the biggest thing from a legal standpoint is that a sole proprietorship means that it's you. So everything about it is you. It's your social security number. It's what you put out there. And that means that because it's you, if there's a legal action if everybody, usually when we talk about legal actions, we're talking about contract or tort. Tort's when you get hurt. Contract is just what it says. But when you're a sole proprietor, you are standing good for both of those things. So, for instance, if you're leasing a space, you're a sole proprietor, someone comes in, slips and falls, it's potentially you that's liable. Or you make a contract to purchase so many bottles of local honey from a producer, and you can't make good on your payments, then you personally are responsible for the contract that you've entered into. A limited liability corporation is sort of the next area, and from a legal standpoint, you're creating a company that then takes on most of the liability. Bear in mind, if you're the person that's doing the business, so if you're, say, a tourism guide, and you take someone someplace where they get hurt, that's you individually, so you're still potentially liable. But if you have a guide that goes out for you, then theoretically you can stop the liability at the LLC. And an LLC is an organization. LLCs and C Corps and S Corps are organizations that are started by filing certain required documents with the State Corporation Commission. That document creates the entity that then you manage. So an LLC is typically a member group. You don't necessarily have stock that goes out, you have percentage memberships, and Mike will hit on that because I think that's the most important part. The taxation method is a little different. And a corporation is sort of the bigger brother of the LLC, and a corporation is typically designed to be either a C Corp or an S Corp. The S Corps are typically smaller because of tax elections, but they can be just as large. And the idea with stock is that you can sell or maneuver or transfer the stock for various reasons. You can do that with an LLC. It's just a little more difficult because you typically have members buy in. The amount of cash that they contribute to the LLC typically can determine the percentage of their ownership. Whereas if you are a corporation and you own 85% of the stock, somebody buying the other 15% doesn't really change. You still have that 85%. You could sell later on. So that's kind of the legal, with the LLC, the S Corp, and the C Corp. The idea is that you create an entity that acts and does its own, has its own legal liability to a certain extent. So that's kind of the highlights, and I'm sure we'll hit on it a little more, but that's the general idea behind the legal aspect. And so with a sole proprietorship, you don't have to do anything. You just hang a shingle out, you're ready for business. With the other three, you have to actually file something with the State Corporation Commission. Typically, you file a document to start the organization, and then you also have to file either bylaws or operating agreements that are sort of the governing document that tell you how those businesses are supposed to run. So that's the general. I'll be quiet and let Mike fill in the good stuff.
Thanks for encapsulating that 80-hour course you could have presented into 10 minutes. And same goes for taxation. So I guess everybody understands you're going to pay tax on your profits, okay? And just know that there are a couple different types of tax that you can pay on your profits depending upon what type of entity you are and how you get those profits or how you take income out of that entity. In the most simplistic matter of taxation, you walk in this building, you set up a business, a sole proprietor. And that sole proprietor basically makes a profit, and you're going to pay regular income tax on that profit. And you're also going to pay what's called self-employment tax on any profits. Self-employment tax are generally 15.3% of the profits. So at the end of the day, you put your profits on your tax return, you take off standard deductions or itemized deductions, put on the other types of income on your return that are taxable, and you calculate regular income tax. And then you come over and you make a side calculation of your self-employment tax, of which you get a deduction of 50% of it for. And you add those two numbers together and that's your tax. So, the maximum federal tax bracket is 37%. That 15% bracket, then there's let's just call it a state 6% bracket. So all in, at some point in time, you can be looking at 48% of your profits going to some type of federal and state tax, federal income tax, state income tax, and self-employment tax. So, basically, if you decide that you want to put an entity over yourself, and John alluded to an LLC, which is a limited liability company, that does nothing for your taxation as long as it's just one owner. It just puts a liability veil over your entity and over the types of legal exposure that John alluded to in this conversation. So LLC doesn't really change the nature of tax from a sole proprietorship to an LLC. From there, you can look at what's called an S corporation. An S corporation is a corporation that makes a special tax election to have its profits pass through and be taxed on your personal tax return. And the beauty of the S corporation is that those profits are not subject to self-employment tax, so they're not subject to that additional 15.3% tax that a sole proprietor or a single member LLC would be exposed to. However, to get profits out of an S corporation, you have to take them out as salary, which means you have to run them through payroll. And whether you know it or not, for all of you that work for somebody else right now, when you take that paycheck home and they take out Social Security and Medicare out of each check, that totals 7.65% of whatever your gross pay is. Your employer has to match that Medicare and Social Security tax. So now all of a sudden, the same 15.3% of self-employment tax that I alluded to for sole proprietor or single member LLC tax on profits is being borne by your S corporation. It just, half of it comes out of your paycheck and half of it gets matched by you as the employer. So what happens with an S corp is that you can play with shareholder compensation to try to limit the exposure to those Social Security and Medicare taxes. The IRS knows that, and they know that you can do that to shelter some of your profits that you would otherwise pass through from Social Security and Medicare tax. So they have a principle that they call reasonable comp. It really applies to C corps, but they also apply it to S corps to make sure that you're not taking out, making $100,000 and taking $5,000 out as a salary. And we like to use the insurance agents as examples, because over the years, they're the best ones to come in and say, I want to start an S corporation, and it's like, well, how much are you making? And they say, well, I'm making $150,000, but I know I can only take, I can take a salary of 35 and shelter, 100,000 or whatever the number is from self-employment tax or Social Security taxes. And, our counsel to them is the IRS is aware of this issue, and just know that, they can come looking at your return any day. And if they do, they're going to make you prove that you're only worth $20,000. It's probably not going to hold up. But yeah. Mickey looks good in orange. So the S corporation gives you a little bit more, it can have a better effect, especially if you're borrowing, if you borrowed money and you have debt to pay back through your entity. An LLC will shelter the profits that you need to generate to make those note payments from self-employment tax, which, again, is a good thing. With a corporation, you don't have to put the S election on it. You can just let it be what's known as a C corporation. And a C corporation basically pays tax on its profits itself. You still have to take out any money that you want to take home, so to speak, as salary or dividends, but any profits that you leave in the C corporation get taxed at a federal rate of 21% and a state rate of, again, I call it 6%, 5.75%. So C corporations are really good if you want to build a big capital-intensive business. In other words, if you were going to start a power plant, or you're going to start, something that took a lot of working capital, a lot of fixed assets. They're not real efficient for small businesses. They can have some benefits in regards to what's called the qualified business income deduction. It's just an analysis that, your CPA or tax preparer has to make. But the problem with the C corporation is, you can sit there and you can start several businesses in your C corporation and build up a lot of capital, which might only be cash for you. But at the end of the day, as I mentioned with the S corps, the C corps have this reasonable comp principle too that the IRS looks at. And they're only going to let you take out reasonable compensation before they try to call anything you take out as a dividend. With your S corp, any expenses you pay, salary or otherwise, salary to yourself, is a wash, because you get a corporate deduction for it against profits, but then you pick it up as taxable income on your personal tax return. So it's really a wash. But with the C corp, when you pay that, any profits you leave in and want to take out, you have to take out as a dividend. And those dividends are not deductible. So what ends up happening is when you take those profits out, you'll pay another level of tax on those that you don't get a deduction for within the C corporation. So it's generally referred to as double taxation on the profits. And where it really hurts you is when you build a business in a C corp and you try to sell it, and you do sell it, and all your proceeds are stuck in the corporation, and you're trying to figure out how to get them out in a tax efficient manner. But like I said, C corporations aren't really used a lot for small business. Other than that, with an LLC, or let's just say there's two of you that want to partner for a business, you can just do a general partnership. It operates very similar to a sole proprietorship. The partners, as John alluded to, agree on what their ownership percentage of the entity is and how they're going to split profits, and generally the profits are are split on, generally speaking, on whatever the ownership percentage is. You can vary that. With the LLC, the same thing. The profits are split by the partners within the LLC, who are really called members. And each member picks up their share of taxable income. The taxable income that passes through is subject to self-employment tax unless it's a passive activity, something like you own real estate that you're leasing. But otherwise, if it's an operating business like everybody in here is, all the profits would be subject to self-employment tax.
Okay, I've got one more starter question, and then I'm gonna let you all ask questions. So Mickey's heard the descriptions of all of these different entities. I want you to tell them their insurance recommendation, if you will. If you have a sole proprietorship and you choose to do that, do you recommend that they have insurance for the business and an umbrella policy because they're, you know, they're liable personally? That's what I kind of want you to explain.
Well, we always recommend an umbrella policy. It's more premium for the agent. No, there's not much difference in the way you treat these forms that these gentlemen were talking about, insurance-wise, except when it comes to workers' compensation. So when you get big enough to have workers' compensation, and the state of Virginia says when you have more than 2 employees, 2 regular employees, they can be part-time or whatever, but if you got more than 2, they say you're liable to the Commonwealth for workers' compensation coverage. Then there is a difference in the way that is handled depending on your form of business. And somebody will probably have a question about that as we go along, so I won't get into the details of it right now. One thing I thought of when both of these gentlemen were talking about these forms, though, is people use these forms to protect their assets too, don't they? I mean, one of the reasons they go from a sole proprietorship to an LLC is to protect their personal assets, especially if they're married and all that sort of thing. And so that's something to keep in mind too when you talk to your legal person about your form of business. So, where'd she go?
She left.
Yeah. But there's a big difference in the way you treat your exposure for workers' compensation when you set up your form of business.
Okay, does anybody have questions now? It's your turn.
So, for the accounting side, I'm a single member LLC, so I pass through my taxes. So kind of 2 questions. One, I want to build retained earnings, but I also want to pull the number back so I'm not showing as much income, so spending, however, at the end of the year, so when it passes through on my taxes. One, if there's anything I need to worry about as far as legality there. The other thing, well, I'll let you answer that first.
Well, legality-wise,
Right.
I'll just tell you that income is either, all your sales are gonna be taxable, all your membership fees and everything you take in, and your business expenses are your business expenses. So whatever the difference is what you're technically taxed on, regardless of what anybody ever calls it. So your question was
So basically,
to,
at the end of the year, like if I had 20,000 profit,
Right.
you would buy $15,000 worth of equipment before the year's out, bring it down to 5,000. Just 5,000 is passing through my taxable income that way.
yeah, generally speaking, when you buy, so, you know, typically year-end tax plan says, you know, this is where I sit profit-wise, here are some options, whether it's, you know, accelerate expenses that you might otherwise pay in 2025, we're talking about the end of 2024, buy equipment, pay employee bonuses, consider retirement plans, deductions, stuff like that. But from an equipment standpoint, yeah, as long as it's, you know, we have what's called bonus depreciation. It was 100%, went to 80% last year, and this year it's gonna be 60%. We also have what's called Section 179, which allows you to write off 100% as long as you have less than, I think it's $275,000 of equipment additions. I can't remember the number, maybe it's $1.5 million, but you're not anywhere near $20,000. But yeah, you can use those deductions to offset your profits.
Okay, because that was one thing, like, on the retained earnings side, I like to build some retained earnings, for any kind of emergency. Setting that money aside, there is no way to subsidize that, that's just going to show profit.
That's just profits, and
It's
it's
just
in a
classified
checking account.
Right.
So basically, you're gonna generate taxable income, and that, whatever that excess cash is, you're gonna set it, keep it in its checking account, or find something to put it in, but it's still gonna be taxed.
I actually have a question. So between like the C corps and the S corps, if someone, and I might be wrong on how I'm asking this question, but specifically with the S corps and stuff, is there like a minimum or maximum hourly or like wage salary that needs to be met for owners? Or is it kind of just a looser concept on that side?
It's a looser concept. With the S corp, it's really, the litmus test is how much effort the owner's putting in, what are the owner responsibilities, how many hours are they working, what type of expertise does it take to carry out their duties and job description. Most of the time, what's happening in small businesses is you can only take out what you can take out because profits just aren't that great. It's not like it's a windfall for anybody.
Yeah.
So it's just, think of it in terms of what would you have to pay somebody else to do your job?
Okay. So just act as a
But
business.
generally speaking, as long as, and I'll just use some examples, if you were making $250,000 and paying yourself $25,000, that's probably a problem.
Yeah.
So
Is there a minimum specifically?
there's not,
Okay.
there's not.
And that goes for both or just the S corp or, I don't know, I know that y'all just talked about.
The S corp versus
The C corps.
the C corp. Yeah, the C corp, the issue's on the other side, it's actually paying too much.
Okay.
But, for what I know about your business, I'm not sure a C corp would be a tax efficient.
Okay, yeah, we were looking to go to the S corp, that's why she was asking me to ask these questions. My mother is a partner, and she was like, hey, just let them know. So I didn't know if that applied to both or if that was just S corp, so that all makes it, thank you.
They're-
That was a great answer.
They're actually opposites.
They're opposites, okay. Thank you.
I have a question. So in regards to whether we decide to do an LLC or a partnership, when you mentioned an LLC, you said there's members and it's divided and things. But how, like, I guess on paper, like, how does that differ from a partnership? Like, because there's two of us mainly that are in the business, but I need to decide, like, do we sign it as an LLC and divide it that way? Do we keep it as a partnership? Like, what?
Typically with a partnership, did you have something?
Well, I was just gonna toss in, so you own several businesses. And you just need to think about the fact that if you don't have a liability veil, correct me if I'm wrong, over those individual businesses, you can expose the assets of one business to the liabilities of the other.
Okay.
Now that you go.
Yeah, and typically, that's always what I look at after you talk to your accountant, because, you have to have an understanding of your cash flow model and what you want to do with that, just like we're talking about retained earnings and things like that. So once you get that straightened out, then the next thing that I think you always have to look at is trying to protect yourself with some sort of legal entity to the extent you can. So like Mike said, you don't want to create a situation where you, because as a partner or as a sole proprietor, everything you own is potentially subject to creditors of some sort. And there's a concept in the law called a judgment creditor. Somebody goes out and sues you, they get a judgment against you. They're the same as if they were a credit card company, okay? So they can come after you for your assets. So the idea with a limited liability corporation is that what you use for that company and what that company generates essentially stays within that confine. That's what you want to do, right? So partnership, you can create a partnership agreement which talks about how you're going to split your money, how you're going to operate your business, but in the end, that partner can obligate you to most things that you can obligate yourself for. So that's always something to consider with a partnership in addition to the liability. You can do some creative drafting, but if your partner goes to Lowe's and holds himself out as your partner, then Lowe's has an expectation that you're going to cover because this is how you operate. So with a limited liability, you create the organization, same thing, you can divide it, you can say, I'm 30% responsible, you're 70, you can do all of those things. You draft the operating agreement, which identifies what responsibilities each member of the organization has, and then that sort of serves as a boundary for which you can, in effect, come after them if they've done something outside of the operating agreement. The other aspect of it, and I'll ask Mike to correct me if I'm wrong, but it's my recollection that when you have a partnership and you want to get rid of it, you kind of have to wind it down. You have to sort of close out all the books and end all of the tax year and all of those other things. Whereas with any of the corporate entities, you can sell your interest. So I could sell my interest to Mickey, and the LLC or the S Corp or whatever keeps right on functioning. And that's always something to consider if you think that part of your objective is a short-term kind of profit gain, so to speak. So does that help? Does that make sense?
It does.
Yeah.
It's still like, so we would either be a partnership or an LLC?
You can be a partnership, but you have to understand that the partnership creates a little more liability than an LLC, because if you have an LLC and a partnership and they're both doing the same things, then there are certain situations where your judgment creditor can only come to the end of the LLC. They can't come after you personally. Whereas a partnership, it's a little easier to come after the individual and apply their judgment credit or the judgment against you for, say, your automobile or your home or your retirement or something like that. So those are all things to consider. My recommendation is almost always start out with an LLC unless a tax professional tells you differently.
From personal experience, I've been in 2 partnerships, never more. A friend of mine says, take in laundry before you take in partners. The other thing that, and I'm interrupting here, but the other thing that Mr. Martin said is getting rid of one, it can be difficult too. It's kind of like trying to have a divorce, isn't it?
Yeah.
I mean, it can be pretty bad. And one of my partnerships ended up that way. It was an unfriendly split. So,
So
anyway.
is it more difficult now that we've been in business to switch over to an LLC, or is it something you can do anytime?
Typically, you can keep right on moving, and if you're going from a partnership to an LLC, strike me if I'm wrong, there's no tax conversion issues like you might have with a C to an S or an S to a C corp. And that's why when I took corporate law many years ago, LLCs were just coming into their existence. People didn't know what to do with them. They didn't know how to really because of the limited liability aspect of it. But they have become so popular and so easy to deal with now. An LLC can be a member in another LLC. So that's how a lot of smaller LLCs get their capital infusion to grow, is that they may sell a certain portion of their membership to another LLC that's the funding entity, and all they do is get profit in return. But it's not like a loan, because the member LLC has some control over what's done and some The operating agreement will spell how you dissolve how you dissolve the LLC, whether you can buy out a partner who's bitter and, causing difficulty. Usually a good operating agreement will define how you exit, and that's something. You can do that in a partnership agreement, but it's usually harder to do, and, like Mickey said, a lot of times people just, you take in a partner, you don't think about that sort of stuff. So it's good to do that from the outset with an LLC.
And I'll confuse the issue even more. So partnership taxation, partners get taxed on their profits. You can start an LLC, and the default taxation for an LLC, multi-member, in other words, more than one member, is partnership taxation. So the taxation doesn't change. However, you can elect to have that LLC taxed as a corporation, as a C corporation. Or you can put an S election on the LLC and get taxed just like an S corporation. So it used to be that you can look, and in your mind you can look at it and say, well, this company says their name is Mickey Tyler LLC, but you really don't know how he's taxed or really what type of entity well, you know what type of entity he is, but you don't know how he's taxed. And I think there are different organizational aspects. Is that right? When you have an LLC that's taxed as a corporation?
Yeah. Yes, and Mickey alluded to workers' comp. When you are an individual and you hire people, you don't count against your number for workers' compensation, determination of workers' compensation employees. And if you're a single member LLC that treats yourself as a sole proprietor, that for tax purposes, it's the same thing. Right. But if you treat yourself as an LLC with a corporate election, then you are automatically one employee of the corporation. So now you, instead of being able to hire the additional folks and still stay under, you count against that census whether or not, so there are consequences that come with that.
I have a question. So our accountant advised that we set up as an LLC, but after listening to you guys talk about the S corp, I'm wondering if we should leave an S corp. It's just me, and we have two other people. So we have a patient care coordinator and a person that does insurance billing and another check. But I'm the only provider there, just a small family office. So would we be better off tax-wise because you're avoiding the 15% with the S corp, right? In some way, they're like, I don't have to do workers' comp because, like you said, I can only comp myself because we're an LLC with just me. So I'm just wondering, between the two, would it be more beneficial for us to do? And the insurance is billed weird. Like, she's not salary. It's like she is like a flat fee, and then like the amount of, like, say she does a dollar volume of $10,000 in claims, we pay her a percentage of the filings. So it's not like a straight hourly salary type thing like the patient care coordinator is. So I'm just wondering, like, would we be better off as an S corp, or should we say an LLC for tax purposes?
Well, my famous answer is it depends. Depends on what your profits look like, how much salary you're able to draw out. In regards to the billing clerk, that they just work for you, or they work for other people? Do they have a business?
She actually works for a couple other doctors in Abingdon, so she just.
Outside of your office, just comes by.
Yeah, it's quite a few hours that she puts in. It's definitely 20 hours.
I guess the issue I was trying to test here is whether or not she was truly an employee or a contractor, which a lot of small businesses try to skirt to get out of paying Social Security, Medicare tax. I'm not saying you are, I just wanted to pose that question.
We don't pay that, actually.
Right, you would, not a contractor.
The way that, yeah, it is contractual.
So, yeah, whether or not the S corp is going to be better for you than an LLC, it could be. It just sort of depends on, what those profits look like, what the salary you're taking out looks like. Is, what do you have debt? How much of the cash flow is going to debt retirement? Just people in. Well, hold on, they'll probably forgive. By the time this is over, they're going to forgive it. So. But it just depends. It's not. I can't sit here and answer it for you.
Okay. Well, he's steered us in that direction.
those options in. But for some reason, I guess I was just so overwhelmed with everything and starting a new business, because I mean, you don't think of the little things, like all your forms and like just different things you have to do, but he explained that to us, and he explained to me why we should do the LLC over the S Corp, but I can't remember what that
Well,
reason
a lot of
was.
times we'll recommend an LLC just because it's easiest.
Okay.
You don't have to deal with payroll for yourself, unless you put an S election on it. And it's just the easiest way to take money out of the entity, you know, because you can just take it out as a guaranteed payment or distribution. So a lot of times,
Higher taxes, basically.
you'll pay the self-employment tax yeah. So a lot of times we'll tell clients, look, start out as an LLC, we'll keep an eye on it. You can always, you know, move to an S Corp somewhere down the road.
Another question. So in regards to my single member LLC, I have our visible organization, and then also very basic operating agreement, but I'm wondering, even though it's just me and a single LLC, I have very large liability, you know, insurance policy and stuff, so I have that covered. Maybe I look at an umbrella, I don't know. But should I beef up and make my, even though it's just an operating agreement, more robust in the event of any kind of like, forbid it ever happen, but a lawsuit, would that help me having more robust operating agreement for that LLC, or does it even matter?
Well, the operating agreement is really gonna be more effective for you if you wanna bring in somebody, or you're looking to add an investor down the road, or even if you decide, hey, I'm really good, I wanna go ahead and sell. The operating agreement will have those basic terms. So for you as an individual, as a single member LLC, you know, I would go with the simplest form you have, because you don't want to bind your hands. You want to be able to do, you know, most of those operating agreements will say something to the effect that you're authorized to do all activity that's, you know, beneficial toward the objective of the company. You know, something along those lines, some sort of legalese to that effect. And then, you know, if somebody gives you a hard time, this is my operating agreement, this is what I'm authorized to do. So the broader, the better, when you don't have anybody to argue with. So if you decide to take somebody in, you know, you want to think long and hard, because again, like Mickey was saying earlier, that's when you have to be able to get along with somebody, or, and I'm adding this to what he was, you know, alluding to, that's when you want to be able to exit with ease. So a lot of operating agreements will have, you know, valuation formulas, so that this is how it's valued, this is what happens. You know, I want to buy you out, I'm going to make an offer. My offer has to be within 10% of the value of the company based on, you know, the last year's tax returns. There are all kinds of formulas that go along with that. But for right now, you know, unless you're intent upon adding a member soon, I'd say, you know, if you've got a functioning legal operating agreement, go with it. And if you decide to expand, then sit down and talk to somebody about what additional clauses, what additional operating language you need, and then amend your operating agreement.
Okay. Yeah, there's no plans to ever do that. I've worked with like WC part-time people, you know, as far as like expanding the ownership of it, it's just more liability around if there's, you know, things I can put in place that better protect me.
Yeah, typically not really done as much with the operating agreement except for contractual issues down the line, you know. But, you know, the idea that you do everything in the name of your LLC is the bigger issue. You know, you go out, you buy gym equipment, it's gym, correct?
Yes.
Yeah. You go out and you buy new gym equipment, you buy it on a, you know, a 90-day or a 160-day or whatever your purchase plan. It's the LLC that's buying it. Now, you may have to stand in as a credit, you know, to back the credit line, but to the extent you can get out of that, that's even better, because it's no longer you liable individually, it's your LLC that's liable.
Yeah. So that's my biggest concern, is coming after our first process, just to make sure. You know,
Yeah, just to operate as the LLC, and all you do, hold yourself out as the LLC. sign everything by, by the LLC. You had it.
So, this being like an employment, I'm gonna have acres and neighbors come in. I'm not gonna treat them as partners, they're their own entity inside the employment as a whole. So would a individual LLC cover vendors as well, or is it just covering some as the employer, or like I said, no, they're not considered employees either?
So in that model, the LLC would be the emporium. You're the member operating the LLC. The LLC would have all business transactions with the vendors who come in to take part and to present their, their art, so to speak. And one example would be if you get into, a dispute with a vendor about how the rental of the, do you rent your space?
The employer or what?
Yes, at the Emporium, when you have people come in with their.
Booth fee and a percentage.
Okay.
Of sales.
So a good example for you is the Emporium would always want to execute whatever lease agreement or rental agreements or whatever you do paper-wise, not you personally. Then if the vendor, or, the crafter decides they're not being paid according to the agreement, if there were a legal dispute, it would be against your LLC, not against you. That's where you protect your liability, because then it's my LLC that's operating. We're all making money through the LLC. You're paid on a contract basis through the LLC. So that's how the liability is supposed to be, that's how the liability shield works.
So if something happens to one of their clients, somebody wants to have their number come up to the employer, you know, like that, maybe themselves.
That's the objective. That's what you want to be able to do. And they're not a partner with you, they're a customer in some capacity or a vendor. That's why I said vendor, because they're utilizing part of your business to make their own, so it's contractual basis.
Is there a difference in the insurance wise?
Well, most of the time, a situation like yours, they would require the vendors to have insurance, and then maybe even name you as an additional insured since you're the landlord or whatever. Of course, some of those type of entities can't easily get insurance sometimes because they don't have a, especially if they're really small, but that's the typical model.
Try to word it into maybe under agreement that they need to have some kind of insurance. If not, and is there anything that you help cover them?
Well, possibly. You might be able to,
I would want to do that, but
yeah. Well, you could maybe do it and charge them for it, but you could talk to your insurance broker about that and see if that might be a possibility.
One other housekeeping note is you should get a W-9 filled out from each of your tenants or whatever you refer to them as, so that when you pay them their monies, you'll have the tax reporting that goes along with it.
Is there a proper way to sign those contracts as your LLC?
Yeah, do you operate as the member manager? That would be my recommendation. You sign it, whatever the name of your LLC, by your name, member manager.
So I have a question, kind of piggyback on something Jeremy said. And I don't know if this is something that you guys can answer, but okay, so with Shade, like I said, we're currently in partnership, so we're together, but if we were to need a loan, if we were an LLC when we switch over to do that, how do I walk into a bank and say, I want you to trust my business to give me money? I have a credit score, but my business, you know what I'm saying? You understand what I'm asking? Like, how do I go to a bank and say, hey, we need money, and we promise we'll pay it back?
Well, first of all, they're gonna ask for probably 2 or 3 years tax returns for shape, which you don't have. They may ask for an updated profit and loss statement, set of financial statements, balance sheet, profit and loss. Whether they take an internally prepared set or you have to have your accountant prepare them is determined by the bank. They'll probably ask for copies of your individual tax returns for you and your partner, maybe 3 years back. And, you know, if the problem, or it's not a problem, but sometimes it's a process of educating the bank on, you know, because they're looking at static numbers on a piece of paper, and you have to basically sell them and show them why and how you're going to be able to pay that loan back. So, you know, whether or not you might show them last year's profit and loss statement that shows a loss, but if they dove into it, the first 9 months were big losers, and the last 3 months you're really making money. You just didn't overcome your early losses and your startup costs. So you've got to maybe put together a projection for them. Here's what I think I'm going to do based on my current trends and my marketing money and what I'm going to spend, and, you know, try to show them not only profits and losses but cash flow that goes along with it. So here's the money I'm going to make. Here's where I've offset it for the loans I'm going to pay you, and, you know, whatever the case might be, all your ins and outs of
So if we're
cash
trying
flow.
to put together like projections, how do we do that? Like, do I just walk in and say, hey, I'm gonna make, you know, $500,000 next month?
Well, it's like everything else. There's a sniff test to it.
Okay.
But so you got to lay out your assumptions, and whatever you're using in your projections. And the best thing to do is to start with last year, and then try to build a monthly Excel worksheet that shows what you expect to sell each month. You know, make sure you're paying attention to how many weekends are in a month, because that probably, maybe weekends are your biggest days of the week. So, you know, just them seeing those fluctuations, they know that you put some effort to it. And, you know, just try, you have to lay out your assumptions. My assumptions are that my sales are going to grow by, you know, 5% or 10% or whatever the number is. I'm going to do these special shows or town events, and, you know, I'm going to buy a food truck, whatever it is. And you just need to generate some assumptions, and here's how I'm going to cut my costs, or at least here's my recurring costs, because, again, if they look at your historical financial statement, they're going to see a lot of startup costs in there, I presume.
Yeah, and with that, just like Mike said, you know, you take a look at these things and you say, you know, this is what we did for the month of January. We anticipate that warmer weather will help us. You know, February is probably not going to be a lot better. It's a shorter month, but as we start to get to March and April, it gets warmer. By the way, we're going to put this amount of money into marketing at this point in time. We think marketing will boost our sales by 3% or whatever, and all of those things. You know, if you go to the Federal Small Business Administration, they have a packet that you can look at. You can download. They're free to get. And they will talk about the cost projection methods that they want to see when you go to them for a loan. But to go back to your original question, despite all of that good hard work that's absolutely necessary, you're probably going to have to sign as a co-signer for your own LLC's loan. And that's going to be true for most all of our startup businesses, you know, because till you get to the point where your business has its own credit record and credit score, most banks are going to say, well, we may give you great rates, but we want you to stand good for that. And that's an example of where you incur personal liability in addition to your corporate liability. And it's just the way banks are. They just want to be protected that somebody's going to pay that loan back. So until you get to be large enough where you have your own corporate credit prestige, that's probably gonna be necessary.
Okay, I'll go. Do you have any pointers for a seasonal business who operates in a minimum of 3 months? That's our peak time, June, July, August. And yet I pay year-round insurance for my shuttle and liability, of course, to protect myself. Do you have any pointers? I mean, there just aren't a lot of places that offer a vet insurance anyway. I don't know how to shop around, to be completely frank. Can I shop around? You know, does it even help me that I've gone for years now without any problems? Should that help me?
Well, answering the last question first, yes.
Okay.
That helps you. But I don't know what you can do about your seasonal, because unless, there are a couple of companies that specialize in outdoor products or whatever.
I work with West Bend, that's the one I'm using, and Dale Cook is the one that helps me do that.
I'm sorry. Oh, excuse me. Tell him I said that too, by the way. Well, I have a company that specializes in the outdoor products, probably along the same price point as West Bend. I'm familiar with them. But unfortunately, there isn't a product that takes that into account, as far as I know.
I just need to earn more profits. I'm wondering if I shuttle some bicycles for the trail, if that's going to add to my insurance costs. I haven't approached that with Bill yet, and so I'm getting ready to.
I wouldn't think so, but you better ask him and be sure. I mean, the company may have some stipulation, but I can't think of any extra exposure that would cause them, really.
That's what I'm thinking, because, you know, tubes and people, and it's bicycles and people.
Yep.
Just, I'm not owning the bicycles, they are.
Yeah.
Hopefully, that's the difference.
So tell him he can send me a commission for that advice. Okay. No, he's a good guy, I know he is.
We are recording. $50.
Yes, ma'am.
I have a question. If you've ever been on the phone with Mickey Fowler, when he calls you, he says, Castro, Mickey Fowler. Anyway, so.
And she doesn't hang up usually, huh?
He's not picking up the phone. I mean, when I see it, he brought me all kinds of calendars at the beginning of the year. So maybe I paid on time. So you told me one time that there was a difference in our business whether the customer comes to the counter to pick up their order or if we bring the order to their table.
Yeah.
Can you explain that? That's more of like I meant to ask you and I just remembered.
Yeah, well, that was just something the company had for that particular product that they were offering.
Okay.
If you were providing table service, it put you in a different category of liability exposure.
So what,
I didn't understand it, frankly, but that's what the book said, so that's what I had to go by.
I guess in that case, the extra liability would be on my employees or on the customers or?
Well, it creates, apparently, they have actuarial statistics that say it creates a greater risk for you to offer table service than for them to come up and order and take it to the table themselves. I can't imagine what that could be. We can ask
Dropping
our-
that hot cup of coffee on that customer's head.
Yeah, well, you watch social media and see all the poor servers being attacked, and, you know, those are things that would be considered work comp.
Yeah, okay.
I mean,
But
Once the customer has it in their hand, it's their responsibility.
I think that's,
I suppose. But it was just this particular company and this particular product that they offered. That's not a general insurance rule or regulation or anything. Yeah. But it benefited you, as I recall, because it made a better.
I trust you.
Yeah. Well, that's good. Get that on tape, by the way.
any other questions?
I have a question on, in regular retail situation, the insurance is covering the inventory and the building?
Can, yes, ma'am.
Okay, so even if you lease, you still have to get enough to cover the building? Or at
Well, if
least
the
your
lease-
part, or-
If the lease says you're responsible for insuring the building, yes, and there are leases that are written like that, but
Okay.
usually if you're leased, you're only responsible for what you own
Right.
or trying to sell or whatever your inventory is, you say.
Yeah. So
And
like
the-
if the building, let's say a light short circuits and causes a fire and all that, so the building owner pays for, or the insurance covers the building, then I have to, or he has to have it, he has to have insurance to cover the inventory. Should the insurance of the building owner cover any of ours because it was a building malfunction?
Not usually,
No?
no, ma'am.
Okay.
And usually that's spelled out in the lease.
Okay.
So I have one question for you guys. So given that we are a smaller restaurant, hoping to soon expand into maybe multiple locations or franchising, I would assume that as of now, the S Corp would be more beneficial to us due to taxing and just given the circumstances that we're in. Is that true, or would it be better to stay as a C Corp, or how would you all picture that working out best, just given that being our future plan?
Again, it depends, it depends on the level of profitability, how are you planning on raising capital to grow, what compensation you need to take out of the business. It really depends. It's more of a facts and circumstances that go along with those questions.
Okay, but typically for a smaller.
But typically, a C corporation, even though you want to build it and franchise it, I would, initially a C corporation, I can't see that in the initial discussion. So, the beauty of the LLC and the partnership form of taxation, even though it comes with a cost, there doesn't have a lot of flexibility. And what usually happens when you have you start trying to open up other locations is you generally open them under separate entities, especially if you're crossing state lines. So, you want to be able to move funds across entities to help support one another without any negative tax implications. So, the LLC is good for that. With the S Corp, you could run into some basis issues, really on both sides, but the S Corp, you end up trying to protect yourself when you take money out and call it a loan instead of a distribution to try to avert some negative tax implications. But, generally speaking, the LLC is going to be best for you. However, having said that, it could be the S Corp too without taking a look at it, or, I'll just have your tax advisor really dive into it for you.
Okay.
And one thing to consider, if you're going to franchise, long-term, do you look to purchase the property where your new establishments are going to be located? You may want to consider an LLC that manages the real estate only. There could be tax implications. There's certainly, some flexibility with that. So those are things to consider. But all of those things are, 3 and 5 year plans, and you consider, once you have your plan, then you work your tax system through that, you work your legal system through that. So, but I agree wholeheartedly with Mike. The LLC has so much flexibility that it's really hard to beat, even if it costs you a little extra in the end.
Thank you.
And one thing I wasn't mentioning, the LLC, you can agree that, of the first $40,000 of profits are going to go to John, and we're going to split everything else, 50-50. With the S Corp, whatever profits are there have to be split based on ownership percentage. So the only way to bypass that is with salaries, and sometimes that can get a little messy. But there's really, you know, the LLC is a lot more flexible. But as you grow and start looking at franchising, start owning real estate, you know, you probably have a combination of entities for
Yeah.
different
Yeah,
things.
probably.
So a combination of entities.
Yeah.
Okay. Thank you.
Is there a question over here? Did you have a question? I thought I saw you raise your hand. You meant that guy.
This can start off with like writing documents that you need, like, adding like financial policies and waiver, type medical waiver type forms and stuff. I've been using ones that are national organization, but I feel like they're just a little vague. Do you guys help with that kind of stuff as well?
We can, yeah. And there are other attorneys around that will do that kind of business work, but, yeah, we work with a lot of medical providers and that sort of thing. And, you know, I always am a big fan of saying to everybody, whatever your business is, you know, you don't want to have to spend a lot for legal fees. You want to be protected. You know, there are professional organizations for whatever you're doing. I'm sure you have plenty. And if you take advantage and look to those organizations, you know, they're going to have a lot of very beneficial information. I know years ago, I was in a bed and breakfast, and the owner was saying, it was just a small place, but he was saying that they were part of a coalition, and the reason it started is the mattresses were very, very comfortable. We're like, oh gosh, these are the best, you know. And they went into some discussion about the very costly mattresses and how they had to replace them with some regularity. But he said that they would time themselves to go out with all of their other members in this group, and they would mass purchase and just get, you know, 40–50% discounts on these mattresses. And then they had their own, so, you know, there are things from that type of, you know, leverage to pre-made documents to discussions. You know, there are, you know, always, we'd certainly love to work with you and talk to you, but you know, that's part of what you need to be doing as an owner, is looking at all those organizations and resources that are out there, certainly. But
It's
yeah.
honestly been one of the most helpful things for me, because it's so streamlined for what you're doing. I was thinking of you with the kayaking. There's probably an outdoor kayaking, like I just gave one to Kinsey for ice cream association parlors. But I happened to just go about through a different resource, but I bet there's one for kayaking businesses. And it's neat because that's how I found out about my insurance. Like, we got discounted liability insurance for being an audiologist through our national association. So it's like the resources are just unlimited. And networking, I can't tell you how many people that had 30, 40-year-old audiology practices that were helping me build
Yeah.
my practice,
Yeah.
giving me like, where to spend your marketing money.
Yeah.
Like just networking.
Yeah.
You know, like I don't know these people that are across the United States, but telling me products, buying groups that they were using. I mean,
And-
the stuff that really helped us.
And is that where you got your financial agreements that you're working with now? Did you?
It's actually, it's AAA.
Yeah.
It's American Academy of Audiologists.
Yeah,
So,
yeah. And my guess is that those are tried and true. They're sort of tested already, you know. We'd certainly be happy to talk to you.
I just know for the dizziness, if we add dizziness, we're definitely gonna need, because there's so much more risk to that.
Yeah.
So I mean, they need kind of a little bit ahead, because, they don't have those.
Yeah.
They didn't handle those.
Certainly, yeah. No, it's, and, you know, those are the kinds of things that you sort of have to just be on top of as you grow. It's growing, man.
Yeah.
I have an open-ended question for you, Mike. So like I've done my own books, I've had previous businesses, and also for a living, work in the federal budgetary accounting realm, which is much, much different than normal accounting. but I typically use QuickBooks. One, if you think it's decent, or if there's other options, but also, is there any pitfalls, things to watch for, good things to do as far as chart of accounts? I don't know if anybody else is doing their own books, but like good housekeeping and accounting.
Yeah, QuickBooks is pretty powerful. We have about 120 clients that we close out every month on QuickBooks Online. You know, there's nothing you can't do from a general accounting standpoint, and with the developer add-on, so you can probably get a membership management system, point of sale that sort of goes in front of it. You know, it's like anything else. Garbage in, garbage out, and it's real easy in accounting to get garbage out because nobody knows what it really means anyway, except the geeks like me that look at it every day. So it's really making sure that you work with your accountant or advisor, or that you understand where transactions are coming from and what they mean and whether they're correct or not. You have to reconcile your bank account every month. You have to reconcile your credit cards, and you have to really analyze all your other accounts. And the way CPA firms do it is, we're going to take those balance sheet accounts and that chart of accounts, and we're going to make sure they're correct at the end of every month and hopefully throughout the month. So, whether or not you're making sure your bank your checking account reconciles to your bank, your accounts receivable listing is correct, your inventory is accurate, your bank notes that you're properly, charging the principal reduction to the loan value and the interest to the interest expense, whether or not you're, making sure your payroll is posting correctly and that your liabilities that are being depicted there are accurate. It's really a process of understanding, first of all, knowing what you're putting in and how it's coming out into QuickBooks, and then being able to analyze it and get it cleaned up. Chart of accounts, a chart of accounts, and what he's talking about is all the accounts that you set up in QuickBooks to recognize your income and your expenses primarily. It's important to try to segregate different departments. QuickBooks gives you the options to set up classes, which, if you think about it, could be different departments. You might have ice cream in one, gifts in another. I don't know. You might have membership income. You might have food and whatever, shakes and stuff that you sell. You can set up classes so that when those transactions hit, you can break out not only the revenue but the costs associated with them, and look at your margins and make sure you're hitting what you want to hit. You also want to make sure, like in your business, that you have accounts set up as cost of goods sold or cost of sales. So anything that's going into your products, food, kitchen supplies, whatever they might be. So you can sort of look at those direct margins. Once you get below and into what they call operating expenses, then the way we typically do it is QuickBooks doesn't let you set up headers and stuff like that. So just to keep it simple, I'll give you an example. You can set up an account called utilities. Then you can set up electric, gas, heat and oil, whatever, make a sub-account of utilities, so that when it prints out your P&L, it gives you the total of each of those individual items plus the total as a group. So it starts to, you want to set things up so that from a management standpoint, you can really understand expenses from month to month or year to year, and really know what you're doing. So that's a key to it.
Is owner's equity and how to show that, whether it's assets I'm dumping into the business, like physical assets, or like something tangible, versus cash, and like how to properly show that. And I've seen it done different ways because the internet, and it's like I'm trying to figure out if I'm doing that and reflecting that correctly in my statements.
So so you want them all to go into the equity, the owner's equity section. I think that's what the QuickBooks calls it. Sometimes it might be, you might have an equity account called capital contributions, You might have one called distribution, so every time you put money in, it's just captured in capital contributions. And then every time you take money out, it comes out as distributions. No reason, you know, in a sole member LLC to show it as debt to yourself. But, you know, typically, and QuickBooks, I think, wants to, when it closes out your equity at the end of the year, it wants to put it in retained earnings.
It's weird.
Yeah, and generally, we reclass that back to capital and close out your distribution account and close out your capital account. Some people like to keep that capital contribute account open forever just so they can always see what they put in versus what they took out. But as long as it's going in that section, you're right, QuickBooks can create a hodgepodge in that section. So just take it as a total.
Right, yeah. Well, all I care about, get it corrected at the end, that way, you know, all my taxes, so I can write everything like that, so.
I'd like to learn more about QuickBooks. Is that new knowledge about QuickBooks on here?
They have.
You will go to our YouTube channel, just go to youtube.com/new knowledge.
Okay.
We've done one-offs, and we've also done a series thanks to Mike Spiegler's office allowing employees to do some sessions. So there are multiple sessions on YouTube.
I think Aircom uses Wave. Is that one?
I'm not sure.
Okay, yes, is it?
Wave?
Yeah. That's the one he recommended, and so that's where he does stuff, he sends it to me, it's very simple to look at.
Just knowing what it does and make sure you understand what you're putting in.
He's cheap. I was really poor when I started this business, and so I had to go with the cheapest thing I could possibly, I mean, I'm just being honest. I have 3 teenagers, so, you know, that's all poor.
I've got a wife.
But, I mean, it is simple to look at, but I've just heard that QuickBooks is kind of the premier, you know, and he's great, I love him, I don't think I'll change it.
Is Wave the software or the person who's doing it?
Wave is the software.
Okay.
But he sends me like, it almost kind of looks like it's like a spreadsheet. But it's very, it is easy to look at, like, you know, I've seen some QuickBooks and they look a little bit more complex. But,
You know, they have some predefined statements. And yeah, there's a lot of reports in QuickBooks. It's just trying, and one of the things that we try to do is set up custom reports so that when users look at it, they can go to that section and just look at what they need to
maybe
look at.
that's what he's doing for me, he knows I'm probably not for it. But I think, you know, as our business becomes more complex, the way that you're saying you can like categorize and subcategorize and kind of, I think we're gonna need to do some of that, you know, so.
You know, QuickBooks will let you create budgets, which is helpful.
Yeah.
Yeah, I think the basic version is $40 a month. It keeps going up.
Big difference in classes. Sounds like use.
Hey Janet, I want to go back to the question about the insurance. If you have it, about 3 sources you don't check with, right? The tourism corporation, the tourism, either Caitlin Hunter or Becky Nave. But also, Friends of Southwest Virginia, their offices are up here on the hill at the Markwood. They are very focused on outdoor recreation, and they can probably get you in contact with a group. And since you're in Mendota, I think you're in the heart of Appalachia region. You know, their offices, I think, is still in Coburn. There's another resource, because you're not the only one doing that somewhere in Virginia. So they could probably reach you and connect you to some sources. And Tony, I don't know if you have any other ideas. Those are the 3 that I thought about.
I got some about insurance, so, for the group as a whole. So with my gym, I have liability insurance, obviously. I have waivers that people sign that lists some of that. Also have to do workers' comp, so I understand that completely in compensation or classification type of business that you have. What other types, like I know there's, you know, for certain type of business, what other types of insurances are out there that people should be aware of that they might, should explore getting for their business?
Well, in your business, it might be E&O.
Yes.
Your package doesn't have that? Usually those,
So I've got general liability.
Yeah.
So ours, like $2 million policy,
Yeah.
general liability. And I've got my assets covered.
yeah.
As that, and the workers' comp. is not-
Well, there are companies that offer a package that includes,
Because that's what I'm wondering, like, on my side, if you know applies,
I mean, you're a certified trainer and all that sort of thing, right?
Our coaches are certified, so yeah, so, I mean, I might need to revisit that.
Yeah, I would suggest you do that.
What is it?
Looks like that'd be an exposure if somebody gets hurt and then comes after you.
Explain, I know what it is, air emissions for the group.
It's like professional liability. I mean, just like a medical practitioner has to have, or whatever, or should have. That somebody who works directly with people and getting them to do certain things with their body and so forth.
So it's more of somebody who's licensed in something that regards a certain element of injury?
Well, I mean, this guy's got it, and this guy's got it, I've got it, and it's more than just the customer that comes to your business. It's if you steer the customer wrong on some issue with accounting that costs them a bunch of money and they sue you for it, or if you sue them wrong on a legal question and they come back after you for that, or if I fail to do something that I should have done dealing with that customer or whatever, or offering something, and so
Yeah.
it's. I mean, there's very few businesses that don't have a little bit of exposure there.
Yeah. And typically, when you get those types of policies, they will define what you can do. So there's some limitation there too. They will describe what your role is for purposes of their coverage. If you step outside that role and something happens, then there's a contractual out, so to speak, to say, he didn't do what we told him. He didn't do what we said we would cover him for. So that goes a little bit towards your planning, what you allow your counselors to do, what your training counselors are going to do.
Yeah, I'd say the big one nowadays is if you have credit cards or you have patient information, you better have some cyber insurance.
That's a biggie.
And it's not, you got to really understand what your policy covers, because, and policies may have come a long way now, Mickey can tell us, but everybody used to have some type of cyber coverage, and it really didn't pertain to a lot. But for example, where we have Social Security numbers and have thousands of them, because we've been in practice 35 years, we have a breach response that goes along with our cyber coverage. So when you get those letters in the mail that so-and-so's servers were hacked and personal information was released, somebody's taken that responsibility to send those letters out, offering the fraud monitoring, credit monitoring systems, or subscriptions. That's really big right now. And
Well, anytime you're taking a payment for anything, you're really at risk of that.
Yeah.
And I was shocked that our electronic medical record, like where you actually put in the records, I thought that you kind of would be covered under that electronic medical record, that they would have to kind of build in, maybe not.
because they get through your credentials,
Yeah.
your whatever lax credentials somebody might have.
It's a biggie.
Any other questions?
Hey, Mike, why don't you talk about the first place winner? What Fleetwood Levens company will do?
Well, I can't remember. So our history has been that we provide really a full-service monthly package whereby we provide the QuickBooks subscription and train provide all the training and support that you need to operate QuickBooks. We reconcile your one checking account, one credit card account each month, and we bring you in on a quarterly basis to talk with you about your numbers and your business and see, what we can do to help grow your business. In the third quarter of the year, we usually take those numbers and start generating tax planning, and then we'll generate your tax return for you. We don't include payroll in that configuration of service, but there's an option there if you need to add payroll.
Thank you. And John?
Yeah, typically what we try to do is work with someone to understand what they're doing, what their business is, and then to make sure they're in the right legal entity, coordinate anything we can with their accountant, and then typically what we've run into a lot lately is that folks have needed waivers. So we've had some back and forth about the type of business and the type of legal waiver you want to try to employ, and just general legal questions that we can help for guidance. And I would say in the last couple of years, though, our folks have gotten busy enough they've disappeared, and so, which I consider a good thing if you get to the point, but we're available. I'd call it a year, but I wouldn't turn anyone down if they called. And it's no cost, that's just a discussion.
I have another question, I'm sorry. So, what about, we have employees in our kitchen looking at our recipes and doing our things. What kind of document do we need to have to protect ourselves from someone coming in, working for us for 2 months, getting information and going off and doing their own thing with stuff that we have done in our business?
It's, so the type of property that you're talking about is more of what we call an intellectual property, okay? So your means and methods of turning these bulk items into great and yummy food. Yeah, I mean, that's what you want to do, right? You want to take something that the three of us could buy, but you want to do something better with it than, what you're talking about is, asking somebody to bind themselves to some sort of confidentiality. But the problem you run into with those kinds of things is, number one, what trade secrets do you have that are so special that I can't find on YouTube?
Right.
So you got to make sure that you've got that documented well, because that's always one argument. Well, if I come to work for you and I sign a confidentiality agreement, I'm basically saying I'm not going to go out and take what Cassie does with all of her, with everything, and A, sell it to someone else, or B, the worst case scenario, go into business myself doing the same thing.
Yeah.
So that becomes a non-compete clause. So you would have ideally a situation where you want somebody to sign both of those. I'm going to keep your private information confidential, and I'm going to make sure that I can't go out and compete against you. And that's all well and good in theory, but in reality, what happens if they do it? You're going to spend money to go forward and sue them to try to get an injunction to stop them from doing that. So you have to weigh it out. Is it valuable enough to you that you want to have the document signed, and that's your call. And then the next thing is, if you hear somebody has violated either of those two, employment agreements, what are you going to do? And so that's the kind of thing, we send a lot of threatening letters without doing anything, but we also do a lot of things. We will sue, but it's not cheap. And
Right.
so those are the kinds of things that you have to weigh. Those are your growing pains, So, there are other things on a more practical level. If you can prepackage some of your ingredients so that those things are sort of centralized and they stay with you, those are kinds of things to consider. But in terms of paper, you're talking about an employment agreement. And typically, you don't see that with hourly folks, because there's nothing, let's say you do go out and you sue, what are you gonna get, you know? So those are all the things that you have to consider, but that's the kind of document you would be talking about.
I'll just add one note. I don't know if we're wrapping up or not, but I'll just like to tell everybody that, you know, in 35 years of dealing with small business, I can tell you that my most successful clients have gone out and retained professionals in whatever field that they require, whether it's an attorney, an insurance agent, get with somebody you can trust, a CPA, a marketing person, a consultant in your business. The most successful people realize that they have to invest in their business and really understand the metrics of their business to be successful.
And you know, one of the awards this year, we're lucky to have Letterpress Communications give 2 awards, one to the startup and one to the existing business first place winner to provide up to, I think it's $5,000, it's either $3,000 or $5,000 in in-kind services to help you if you're a startup, help you develop your logo, your marketing plan, if you're an existing business. They're also going to help you kind of revamp and maybe social media. So we're very lucky and blessed to have them as a sponsor this year for an award. It's the first time ever. I'm ready. Any more questions? You guys finished up? I have some very exciting news. Abingdon has been nominated for the best small town art scene again this year for USA Day. So I have put a weather dress back here. You can vote once a day. So if you guys would put that in your phone and vote once a day for Abingdon, and then just below that you'll see VirginiaLiving.com. There are about 30, 40 categories, probably in Virginia Living, but almost every category there's an Abingdon business. So go on there and vote for the best ice cream, the best shopping experiences, the best restaurants, best historical attractions. There's several. It takes a little bit of time to get through there. If you get to a category and there's nobody in that category that you really like, you can go right in. So this kind of a little fun way, kind of also, with Virginia Living, reminds you of what's in Abingdon, if there are things you may have forgotten. So be sure to vote every day. Right now we are in 4th place, I think, on the small town art scene. And we know that you're not 4th on that list. So we need your help voting every day.
Can you do the best Virginia every day as well?
The best Virginia, you put in your email address and you only can vote once.
Mickey, didn't you win the funniest insurance agent one?
Yes.
Yeah.
Smartest, funniest.
So,
There you go, yeah.
New knowledge, did you go over that, Sandy, new knowledge tomorrow, business entity?
Now, tomorrow's focus is on several discussed tonight about the business entities and the different things that's available for you and the advantages and disadvantages. Tomorrow's new knowledge session is going to go into detail about that. And Rusty Little with Wellspring Foundation is going to be leading that, but Rusty has been in the accounting and finance industry for his career, and he's going to give some tips. So if you're got your peanut butter and jelly sandwich at noon, join us, but it'll also be online later.
Be archived on that YouTube channel with all of those other trainings. Next week is a Zoom meeting, so everybody can stay at home and get into your pajamas before 6 o'clock. It'll be ready for bed. It's creating and managing a business, so we look forward to seeing
Well, I didn't have any goodies, but I'll be glad to talk with anybody that wants to call me. So, no obligation and no
Same here.
cost.
If anybody has any questions.
Yeah, likewise.
Creative and
I'll leave
managing
some
the business next week, so guys, be ready at 6 o'clock for Zoom.
And if I could have done anything differently, I would have taken more risk. So think about that. Don't do anything crazy, but don't sit back and think about it. Do it.
Does that mean without insurance, or does that mean?
No, no. If you take risks, you gotta have insurance, see?
Well,
Thank
thank
you.
you, Lee and Mike and John. We so appreciate you sharing your time and all of your years of knowledge with this group and your partnership with Business Challenge over all these last few years. So thanks.
You're welcome. Good luck.